So you can see I set a limit order at essentially the 504 handle. And what I'm trying to do now is I'm trying to set a stop limit trap below the price, because if the market starts to gun through and I can't get filled at an ask above market price, I might miss it. So, this is a strategy that I'm sure many of you are familiar with. And it's just a way to kind of ensure that you get swept into the side of the market that you so choose. In this case, the obvious one being the sell. Welcome back, trader. Mike here, reporting from Axia London HQ again, and today I've got something special for you. With the volatility that's been ensuing in the markets, particularly equity market, we're going to have a deep inside look as to how I traded the opening range on Sunday, April 7th, on a clearly accumulated fear and panic that was circulating throughout the weekend with the Trump administration's recent tariffs announcement at the Rose Garden in Washington, D.C. last Tuesday. So this is very much a case of a trade sequence that doesn't come often. This is going to be a, once in every few cycle opportunity. So it's critical that you have logs in your Notion, in your Evernote, in your video recordings, so that each time these kinds of events happen, you are better prepared, you have better risk management tactics, and overall, you just feel more confident in accessing that kind of volatility. All right, let's get into it. From left to right, folks, what we've got here, where you can see my mouse and my pen, is just a standard equity ladder view where you've got the S&P here, you've got the NASDAQ here, and you've got the Dow and the Russell here. So Russell orange, Dow green, NASDAQ, you can't see it, but it's teal blue. You can see the chart that corresponds here. And then S&P is kind of a light teal blue. On the left here is just the Bitcoin future, just in case. As we've all seen, the correlation of equities and Bitcoin has been pretty unison on the back of the sentiment drivers. And Bitcoin is an important asset to have open over the weekend, because as we see that correlation with the tech sector and Bitcoin, as many of you might have seen on the Saturday and Sunday trade going into this April 7th Monday, there was a pretty substantial move down on Bitcoin. So that's indicator number one. For those that don't do it, I highly recommend you have just a standard BTC USD, whether it's Coinbase or whatever exchange you prefer, because it can indeed give headway to what is likely to happen on that open drive, which is what we did see this past Sunday. So again, have that MBT if you would like to on your ladders. And what I'm showing you now is essentially the pre-open. So the clock you can see up here, it's this clock was a little bit off, folks. So if you see the clock in the bottom right, you'll notice that. Not sure why this is, but the open at 11 p.m. UK time. So we're just before that. We're a few minutes prior. So this was the close of trade on Friday, the previous week. And really what we're going to be looking for is we're going to look at the pace of acceleration on that first, second on the open. And the goal is to essentially take the fear, take the sort of get me out of this thing type of sentiment, and we're going to try and react upon that on the open drive. There's been many instances of this, whether it's a gap up on a positive bit of news, whether it's a gap down on a new piece of weekend news. The concept remains the same though. Three things. Number one, keep your size relatively low. You don't want to start the week blowing out the account. And again, if it is as volatile as you think, you want to be able to manage it and survive. Number two, don't be afraid to engage immediately. Yes, it is high volatility, but the fastest click, the fastest finger first is going to ensure that if you are indeed right on a gap down repricing, you can manage that quite well with some wiggle room. Lastly, for beginner traders and sort of intermediate traders, I would choose one market. Obviously, these five markets are correlated in unison. So if you were to click all of them, in theory, it would go in your favor. But I recommend that you start building that conviction with one market, so then you can learn how to apply the strategy to multiple markets and then increase your overall leverage and return. So now what I'm going to show you is what I did. And really, this is just going to be what I just told you. So as an intermediate trader, for me, I felt more comfortable going in on the S&P. And also, I want to point out, folks, just to take a step back, the importance of coming out of a week like the first week of April and keeping an eye on your X, making sure that you have any handles on X that are reporting on whether the administration has given any changes to the policy or is lacking to change anything. That is so important because that is what leads to the conviction. And for those that don't know, we had the administration come out and basically say that tariffs were going to stay on for as long as they needed to stay on. And that was just the way it was going to be. So I think the market had some hope that you would see a slight relief or some kind of deal making over the weekend. And that really wasn't the case. And that's when you started to see on X posts, people saying that, you know, the big investment banks, the traders were being asked to come into the office in the US and to be available for that open drive. So as soon as I heard that, you know, Axia traders were obviously involved. And, you know, even if you turned on something like Bloomberg surveillance, the anchors like Lisa Abramovich and John Farrow were online speaking and discussing with other macro analysts and traders at 6 p.m. US time, 11 p.m. UK. So when you see the consensus, when you see the zeitgeist dialing in on something, you actually can get more conviction that that first initial sequence is going to be big enough to attack, right? To harvest that volatility. All right, let's have a look and I'll press play. So as you can see here, you're starting to see some white boxing, which is relatively normal just prior to an open. But what I am looking at is just the relative size of bid and offers that are sitting on the current at market price for any indications of imbalances. So what you'll notice is, if I just kind of wait a little bit, you'll notice that some of the bids on the S&P and on the NASDAQ are widening. So for example, you can see that there's, and I do want to know, it's very important to mention this actually, folks, because of the volatility, I cannot read this market at a single tick increment. So most platforms these days, order flow platforms, have this feature, but as you can see here, it says increment. So my increment on S&P is set to 4. That's just 1 tick per handle. So instead of quarter ticks, it's just 1 full handle, right? NASDAQ, same thing, 4, 12 on Dow, 12 on Russell. And this can fluctuate. Actually, on Monday during the day when things were getting really wild, I changed the NASDAQ to 20, the Russell to 20, and the Dow to 20. And it was much easier to read that order flow. So if you're finding it hard to read order flow in this volatile environment, I highly recommend that you use a increment. So again, I'm going to go ahead and hit play here. So as you can see, some of these bids are widening, and you can see that there's a balance of resting limit orders that want to engage. And again, there's not a whole lot that you can ascertain from this, but what you can do is look for larger bids below that are likely going to get filled. And then you can look to something like your footprint and see how much of it got filled to get an idea of perhaps the footprint design and whether or not you recognize it and it's worth, you know, engaging upon it. Just these little holistic factors are important to mention, right? So again, just kind of waiting here for the initial open. So you can see the market is just completely paused. And yeah, the clock here is, I think it's just ahead by like about a minute and some seconds. I'm really not sure why that is. There was a lot of issues with TT over the past, okay, there. So you can see we very quickly gap down to the 5,200, sorry, not 5,200, 520 zone, which is, you know, clearly a reactive response that ensues panic. It ensues high volatility, right? So you can see I set a limit order at essentially the 504 handle. And what I'm trying to do now is I'm trying to set a stop limit trap below the price, because if the market starts to gun through and I can't get filled at an ask above market price, I might miss it. So, you know, this is a strategy that I'm sure many of you are familiar with. And it's just a way to kind of ensure that you get swept into the side of the market that you so choose. In this case, the obvious one being the sell. Reminder, folks, those blinking lights above, that's just your financial juice tick strike. Very helpful. And I put the VIX on the bottom so that if it's obviously spiking, the VIX futures, it's all correlated. And my visual reaction is kind of in line, right? So you could see I set a couple limits below the price because the price seems to be trading at about 490.90 or 4991. There I get filled on those three. And also note, folks, I am using the micros on this. Highly recommend it if you're a new trader. Using the minis on this was a bit too risky for me, and it just makes more sense to be able to manage that risk. So it's just that easy. You lower the tick size, you lower the overall amount of leverage that goes on per contract. You can learn how to trade a lot more effectively while keeping your emotions intact, right? So as you can see, we're filled a little bit on that 3-lot basis. And now we are looking to essentially follow the momentum, add another one, which we basically want to try to get 5 in, but with all honesty, I only got about 4 in this case. And you can see that the market is very much continuing. And again, remember what I said in the beginning of this video. I said that you want to practice doing this on one market before you go and try to manage all 4 of them. Once you can do it well on one, then add 2, right? And then you consider the variations in behavior. Obviously, the NASDAQ is going to be a lot more erratic. Maybe don't do the NASDAQ, maybe go to the Dow first. Both are erratic, but I think the NASDAQ can be, it can catch you off sides in a way that can ruin the entire trade, and it can ruin your emotional stability when you're trying to be focused and alert. So as you can see, the last 2 lots, I'm just fast forwarding a little bit, I just let go of. And you can see here, there's some jumping around on the P&L. But then once the market hovers below the recent low, you can see that I'm essentially hovering over my limit bid if I want, so that if it guns back to the opening level, I can get out. And you can see I'm trimming. So it keeps hitting new lows and I'm trimming. And I'm just keeping an eye on that P&L. In this case, it's the first day of the week. It's been a volatile previous week. So really, I'm just gunning for about $1,000 in this case. And there you go. We hit the 1,000 mark. Psychologically, I've had enough, and I set my limit. I wait to see if we're going to get a new leg down. It starts to jump back up on me. Again, feeling very unwilling to sit through that. And that's it. You know, about 3 minutes of just immediate response and, you know, keeping yourself cool-headed, focusing on one market, managing the risk, managing the contract size, and having conviction to harvest volatility, folks. You should not be afraid of volatility. Again, not a trade recommendation, just for educational purposes, but it's critical that we all understand that volatility is there to harvest, not to fear. Right, folks? All right, that's it for me today, folks. Hope you all have a great rest of your week, and we'll see you next time.